So 2022 has been certainly a difficult time for global equity investors, but of course also fixed income markets. And there are a couple of reasons why, whether it's rising inflation, hawkish central banks, or rising commodity prices, particularly fueled by the Russian invasion of Ukraine. So investors at the moment are nervous, as indicated by an inverted yield curve. Concerns about a global growth slowdown and recession have been building. But of course, these macroeconomic factors and variables are extremely difficult to forecast. So in the short term, there are growing concerns, but longer term, investors would do well to focus on bottom-up fundamentals and what is the real things that matter for the companies within their global equity portfolios. Well, at Firetrail, we think it's extremely difficult to forecast macroeconomic variables. I mean, I've got 15 years experience on global macro desks, and I know it is absolutely one of the most difficult things you can do, whether it's trying to forecast a recession, move from risk exposure into cash, or time style rotations or sector exposures. Very, very difficult to do. So rather than try and forecast macroeconomic top-down factors, we focus on what matters for companies from the bottom up. So every company that we research, there's over 200 hours of work that goes into analysing companies as a potential candidate for one of our portfolios, including the Firetrail Global S3 Opportunities Fund. So when you say, what are we focusing on at the moment? It's very much talking to companies and understanding what they see as the key risks. And they are continuing to highlight to us supply constraints, getting those raw inputs into their manufacturing processes to produce final products for industrial companies. They're talking about higher interest rates, they're talking about higher commodity prices. So many of the concerns that Australian investors have and global equity investors have are being reflected from the bottom up for what matters for companies, particularly the companies that we speak to. So we invest globally, and our universe is 20,000 companies. So we go from 20,000 companies via quantitative screening, deep fundamental analysis, over 200 hours of analysis on every company that our analysts research, to only 30 to 40 of our best ideas. And those best ideas, being a concentrated portfolio, very, very different to the index, a very, very low overlap in holdings relative to the index and other funds such as passive funds or global equity funds. We're finding opportunities across sectors, across regions, across thematics. So when you look at our portfolio, it's very, very well diversified by company, but also by some of those themes that I've spoken about before. So we have a copper miner named Antofagasta, based in Chile. This is a company that's benefiting from the increase in copper prices. And of course, copper is a key resource in that decarbonisation theme. It's used in EVs, it's used in wind farms, it's used in a lot of the solutions that the world will require in order to have net carbon zero emissions by 2050. Now what's great about Antofagasta is they have great local relationships. They are investing heavily in desalination plants in order their operations to use seawater rather than fresh water, for example. And it's a company that is committed to sustainability and wants to be 100% renewable sources for its mining operations in the future. In terms of supply chain constraints, I'm sure you've heard about the new oil, semiconductors. It's discussed in many pieces of literature, including on Livewire. So we have exposure to semiconductors, and our companies within our portfolio are reporting to us very, very strong increases in revenue year on year. So one company is probably familiar to Livewire readers and viewers is Taiwan Semiconductor. I should mention as well, if you want exposure to semiconductors, you really have to look globally. And semiconductors are in everything. They're in coffee machines, they're in EVs, they're in computers, they're in mobile phones, a plethora of uses in final products and beyond. We also own Micron Technologies, so they produce chips. And the average EV has $750 of memory chips within it. And Micron Technology, a strong contributor to the Firetrail S3 Global Opportunities Fund since inception, the result of very, very strong demand for memory chips from AI and cloud computing, for example. So one company that we have exposure to because of the rising rate concerns and potential for a more hawkish central bank stance from Western central banks in particular is a US insurer, Chubb Insurance, which will benefit in an environment of steepening yield curves and pushing through higher policy rates through their insurance premiums. I think what we focus on at Firetrail is a profile of being an investor rather than a speculator. So it's very, very easy to be caught up in noise of day-to-day material, whether it's via social media or news outlets. And when you consider behaviourally what we are attracted to, it's bad news. You know, there's a reason that newspapers don't lead with good news every day, because they won't sell many newspapers. So when you recognise that the world is operating to try and shake you out of your core convictions and potentially make a bad error when it comes to investing, it can really assist you in potentially reframing what you are trying to achieve via an investment. So what we do at Firetrail is we take a medium to long-term approach, a 5-year sort of investment time horizon, and we also focus bottom-up, fundamentally on what matters. Cast your minds back to March 2020, as recently as then, the pandemic. A lot of people turning into cash in terms of their portfolios. A lot of people missing out on the fantastic run in risk markets since, as central banks and governments sought to support their economies through a lockdown type scenario. Now, what's great since I've returned to Australia and the many conversations that I've had with financial advisors, institutional clients, is that during that most volatile sell-off, that time during March 2020, a lot of investors were looking to put money to work rather than sell their holdings and retreat into cash. We think that timing is almost impossible to do. We think moving out of risk assets and into cash extremely difficult. So we're fully invested throughout the cycle. We have a long-term time horizon, and the great news for investors is if you take that long-term investment time horizon, you are in there's a very, very high probability, a very, very good chance that you are going to have a positive performance profile. The longer you extend your time horizon, the better your odds are. So think about being an investor and not a speculator, is what that would be the message, the positive message I would give.